Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, when news the investor mood yo-yo is still in full evidence. But first up, American mortgage rates tumbled to an all-time low, with their 30-year fixed rate now at just 3.29%. And American factory orders fell 0.5% in January, and that now makes it a fall in 5 of the past 6 months. Year-on-year, January orders showed zero growth. And job cuts haven't yet become widespread in the US, despite the economic wavering, but they have in one industry, tech. More than 10,000 tech job cuts were announced in February in the US, compared with virtually zero in the same month in 2019. Large companies are pulling back and many small tech startups are folding. It's a development that may be leading many other industries. In fact, equity markets are falling sharply again today as the spread of the coronavirus in the United States led one state to declare an emergency, while airline stocks were hammered by crippled travel demand. Airline closures are starting. The S&P 500 is currently down 3.4% in mid-afternoon trade, reversing yesterday's gains and continuing the yo-yo trend. Equity investors show all the signs of confusion, unlike their bond counterparts, who have consistently been strongly risk-averse. The latest compilation of COVID-19 data is out. There are now 16,472 cases outside of China, a rise of 2,500 in one day, as the numbers keep jumping in South Korea, Italy and Iran. 12,700 of those are in 3 countries. A week ago, the outside China number was only 3,337, so it's still quadrupling in a week. And the WHO says most countries are not doing enough to combat the spread of the virus, and that the experience of China continues to demonstrate that it's not a one-way street. Inside the US, even if the federal authorities are not really engaging, one state, California, has declared an emergency. And this is big news, as their largest state and accounts for 12% of the nation's population. An initial clinical study suggests some key data on its likely impact if it gets into the general population, and it would not be good. The January trade surplus in Australia came in much better than expected at $5.2 billion. But this was not as good as the record $8.1 billion in June 2019. In the year to January, the Aussie trade surplus was a huge $68 billion and 4.6% of GDP, and far and above the 1.9% of GDP in January 2019. But the good times won't last. The Australian Treasury estimates that the global virus emergency will take twice as much out of the Aussie economy as their bushfires did, and sapping it of $34 billion or 0.5%. US Treasury 10-year yield is now down yet again, now under 0.91%, a new record low, and down another 6 basis points overnight. And gold has risen again today, up $21 to $1,663 an ounce. US oil prices are $1 lower to just on $46.50 a barrel, while the Brent benchmark is just on $50.50 a barrel. And the Kiwi dollar starts today firmer at 63 US cents. On the cross rates, we're also firmer at 95.5 Australian cents, and against the euro, with little change to 56.3 euro cents. That all means that our trade-weighted index is marginally higher at 68.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.